Hi, I'm Dave Brickell, Director of Sales at Paradigm. Welcome to The Big Picture.
Policy reverting. So the obvious trade is always the expensive one to
this
carry.
whole peak inflation, peak rates narrative, peak Fed, which we've been
talking
talking about.
War, it's an expensive place to find out. Crypto vol, a potentially fatal place to find out.
The crypto option markets are definitely showing some signs of life.
Hi guys, welcome to The Big Picture. I am David Brickell, Director of Institutional Sales at Paradigm and resident macro man. No Joe Crew with us today, but I'm joined by my regular co-host Sohan. And I'm also honoured and privileged to be joined by Nikita Fadeev, partner and PM at Fasanara Digital. Nikita, welcome. Thanks for joining us.
Of course, thank you very much for having me. Really excited to be here.
Yeah, no, great to have you on. We've wanted to set this up for a while. Perhaps we can just kick off. Do you want to tell us a little bit about yourself, your background, and how you sort of built things at Fasanara Digital? I mean, for those of our listeners that don't know, Fasanara are one of the biggest liquidity providers in crypto. So really interested to hear your story, Nikita.
Sure. So my story is, I guess, short and long at the same time. I joined crypto space in 2016, was at uni doing maths, and stumbled upon this thing, Bitcoin. Immediately resonated with me the volatility and market inefficiencies once I started digging a little bit deeper. So I created a team. We started building strategies, and that was fun. We've seen some traction, so we thought, why don't we try to pursue it full time? So graduated, and so there was a really nice opportunity at Fasanara, where we joined forces. We get a lot of freedom to do what we wanted, and a lot of support. So we joined 2018, straight after graduation, just me and a couple of other guys, and started building. And I would say we've been through the whole cycle from doing everything by hand on one exchange, starting off with BitMEX, and then over the years really taking it quite seriously and building a lot of infrastructure, a lot of technology, a lot of sophistication across every single beat of the trade lifecycle. It was a lot of fun. And so fast forward, we're trading on all the main exchanges, quite active on the liquidity provision front, but also doing a little bit of venture investing.
Yeah, interesting. I mean, on the liquidity provision side, that can take sort of many kind of forms. I mean, do you want to give us a little bit more color in terms of the sort of strategies that you run, how you look to make money and find your edge in this market?
Sure. I guess I won't go into too much details, but just to paint the picture. In crypto, obviously the market is quite volatile, but liquidity is quite fractured. So there are primary destinations for the flow to go to, but at the same time there are tier 2, tier 3 exchanges which also see a decent chunk. And effectively, if you look at all of the liquidity that's out there, what we do and what other market participants are trying to achieve is to glue the prices together. And crypto has a lot of specific, I would say, differences to TradFi. In particular, market is quite volatile, and as a consequence, you need to have a lot of collateral, and so sometimes you need to move things around, which takes time, or you don't have the inventory in the first place, which again prevents you from just seizing the full opportunity to yourself. But more than that, there are all sorts of constraints and risks around credit risk of exchanges. So that kind of constrains some of these opportunities and really provides them to be seized by one or two big players, and opens the door for more democratic market. And so kind of our function is to really look around and ask and answer the question, what is cheap, what's expensive, and try to glue those two things together. And how do you answer that question? That's where the game really begins, I guess.
Yes, it's interesting. It's interesting. I know we've spoken before. Like we've launched obviously recently on Paradigm Bybit spreads, where you can trade sort of spot perpetual on a one-click spread, which is kind of like a new liquidity opportunity for makers, for HFTs, and also for for funds that are just looking to put on spreads and play sort of cash and carry type trades. How do you go about like assessing an opportunity like that? And I guess sort of broadly and generally, the kind of, with so many different liquidity pools that you could sort of play in, sort of what are the factors that you consider when you decide, right, this is where we're going to sort of put some resource and start looking to be a liquidity provider in this market versus another?
Yeah, I mean, this really, really important question to answer, right? And that's where we spend a lot of time thinking how to answer it, but also how to frame our mind. So you kind of want to make a prediction, almost like hypothesis, utilizing a lot of historical data, which could actually be data, but more so also just your track record of making good decisions. And so you're kind of evaluating each opportunity and kind of thinking, what's the time that I need to allocate, what's the resources that I need to put forward. And then you kind of think, is it, an opportunity that's going to go away, tomorrow, or, in a short while, or is it some, upfront investment that's probably going to keep on yielding some results, in the future. And what we've seen a lot is that many of these things, especially those that are a bit of, hype cycle, or the projects or the platforms or, things that are just emerging, although there is, sometimes benefit to be the first mover, but oftentimes there is not much. And so you would rather maybe, lose, 6 months, 12 months on some new emerging whatever thing, which usually still would be, pretty small size in favor of, those things that already maybe you invested a bunch of time but still haven't got to the point of diminishing returns, where, the impact versus time kind of flattens out. So it's kind of a bit of science, a bit of art of how you evaluate all those things, but it starts from, really radical self-awareness and, really, meticulous resource allocation, which again, is like everyone wants to be there, but it's in practice, it's pretty hard. But that's roughly, a few pointers. So you kind of try to, in dollar terms, evaluate what's the size of the pie and how that pie can grow. And so you kind of, put like, should I do it today, or, maybe in a month, or maybe never.
Yeah, it's kind of interesting. Yeah, I mean, it is. I mean, like, to me, I think the market is, the trading strategies which make money have really changed since 2018, right? Like, because back then it was just BitMEX with the pubs, etc. Then you have DeFi coming in, and now there's people really concerned about CeFi credit risk. Like, how do you think the strategies, can you give us a brief idea of the evolution of the trading strategies on on your side?
Yeah, I mean, I can just roughly talk about what people have been doing, right? And I think kind of give a couple of ideas of where I think it's gonna go. So obviously there has been price components that people were speculating up, down on any of the time frames. So as long as market ticks, this will be part of it. And that's not something that we do really. Like, what we try to do is be delta neutral and warehouse the risk for very, very short amount of time. But effectively, what kicked off in 2018 and perhaps even before that, but not in any meaningful size, and that went perhaps to 2021 end of it, and maybe a little bit a few months in 2022. It was just buy spot, short the perp. So funding rates were pretty consistent, and this was just a mismatch in availability of dollars. So liquidity wasn't there, so people were really happy to pay the funding costs, which sometimes were 20% annualized on majors and much more on alts, to just acquire the exposure quick enough. You can obviously do it through spot, but then liquidity is much worse, and not everyone were set up or will be ever set up to just do it well. And so I feel like there was a natural evolution where a lot of people said like, okay, we can give directional returns and outperform Bitcoin, ETH, or just give Bitcoin-like returns at half the vol or whatever their sale pitch was. And there were a lot of guys that similarly to us said that market is fractured. There will be growth because of ABC in the space as long as the pie keeps on growing, and there is a lot of volatility, a lot of inefficiencies. Then there is a lot to do on the market neutral front, where you actually just kind of correlate it maybe to volatility and like whatever sentiment proxy, which appetite for the risk assets, but effectively like those things tapered off in 2022 big time, because I think a lot of the random participants just lost a lot of money and kind of exited. And so I think like for the market neutral funds, it's actually a pretty difficult environment because they're benchmarked against Bitcoin and so on, and it's like it's unfair, but also when the rates are quite high, it's also difficult. I think going forward it will be much more of you actually need to build a lot of technology and actually doing some smart stuff to keep on scaling and keep on attracting interest from the investors, rather than I short the perps and maybe turn it around once per month.
Yeah, I mean it's kind of interesting actually. I don't think I've ever told you this, but like when I first to David, like basically in 2018, 2019, people used to come to me and say, look, you can make 30% free, right? Like in crypto. Right? I was like, oh, that seems awesome as a TradFi guy. And then you talk to real DJs and they're like, well, you're trying to make 30%. I'm trying to make 30x, right? So of course I'm willing to pay that 30% cost on perps, right? I think the market has also like it's as you said, it's changed a little bit. It's maybe become more efficient, right? Like because a lot of external players are looking at it and being like, well, this is free and this is maybe risky, so why don't I just get involved? So that's compressed quite significantly. What do you think about the fact that like if you talk about basis in particular, like the basis positive is a very clean trade. Like you buy spot, you sell perp, right? And then you make your 30% return or 20% or whatever it is. What about like in 22 when a lot of the time the rates were negative? Like what are the trading strategies that you guys use at that time?
Well, I mean, there is still plenty to do, right? So you just want to keep on buying low, selling high on the microsecond kind of time frame or sorry, millisecond time frame. And so prices get dislocated all the time. So you can come in and pocket that. But naturally, this is not a game that is open for anyone out there to play, because it's very much technology heavy, infrastructure heavy, research intensive, and that's kind of more in a domain of prop shops. But yeah, I mean that's why I think a lot of the market neutral funds struggled a bunch, and investors struggled a bunch in crypto in 2022. There was still a bunch of stuff to do, but you kind of need to be good enough to see those opportunities. It's an analogy that I'm always trying to draw is that kind of you start off discretionary, right? You look at maybe one exchange, so you're like, okay, I can short the perp and buy the future, and maybe I basically do like fixed versus variable, and I keep it to maturity and maybe roll, and maybe my expected return is 2-3%. Something like that. Maybe I can lever up, but it's all within the same exchange, so it's kind of delta neutral within same exchange. But then it's like, okay, execution is probably not great, but I do it quite rarely. And then you kind of progress, and you're like, okay, my keys are better. Maybe I'm looking at more exchanges. Maybe I'm better, at executing and using some algos. And so maybe like you actually see more opportunities. Maybe you can push more size there. Maybe you can trade in and out more actively. And then you kind of go further. You become good at latency. You become good at at all the fees, all the setups, and so on. And then you kind of see opportunities all day, every day, in quite big size. But then it's kind of obviously that's for the best guys, and you kind of, then there is a tail of people that just don't see any of it. But that's kind of by construction. So it's kind of, it's been good and bad year. It just really depends on like who you are. But yeah, I think like on the fund side, it has been quite turbulent. I think a lot of them are kind of reinventing themselves to some extent.
Yeah, do you obviously a lot of stuff that you're doing is in the CeFi space. Are you looking at DeFi at all? Is that something that you're able to look at, and what are your thoughts around that?
Yeah, I mean, we did. I think it's fascinating space, and yeah, it's everything has a trade-off, right? And so I think it's part of it, exploration, and the other part is exploitation. And there, to me, say atomic swaps. This is purest example of winner takes all. But it doesn't have to be always the same winner, if that makes sense. So you could look at a lot of esoteric stuff, different protocols, different ideas, different implementation, different chains, different coins. So there is like a bunch of stuff that you could do to kind of still, find a niche and so on. But that's kind of more suited for, a couple of guys doing it, in prop capacity, and not really, offering this as an, investment, because you don't really need like any money for it. It's like, as long as you pay, for the first few transactions in gas, then you always kind of come back with more than you started with. But then obviously there is always, quite fat tail if you get hacked, or there is, somebody else exploits you, and so on and so on. So it's kind of atomic swaps, really, really fascinating. And there are like numbers which are quite impressive that people are able to pull off. But I think that's like crazy specialized, and that's not really, set up well for, for hedge funds to be in. That's again more like individuals here and there. And some other, DeFi strategies. There is a bunch. Again, it's like you need to find your own niche, and then are you doing it, in a market neutral way, or you're happy to take some risk, which risks, and so on and so on. So there is like by now a quite large matrix of all possible permutations of of risk tolerance versus reward that you can achieve with it, and other parameters of the strategy. But baseline, I think DeFi is very, very attractive, and there are certainly many examples of people that invested a lot into infrastructure and that paid off well. But again, I feel like that's not really open to many participants. You need to be like actually really good at it to have a chance.
Yeah, sure. It's one of those spaces that we kind of all think that naturally will progress to, and certainly from an institutional side, we'd like to see really explode. But obviously, still sort of got its challenges, I guess. That's kind of limiting that. But yes, slowly, then suddenly, I guess.
Yeah. I think that's kind of is the approach, right? There are some sparks of hope here and there, and certainly, some numbers are really attractive. In terms of bids, volumes on Uniswap, which are oftentimes are higher than Coinbase, or DYDX or GMX, that kind of stuff, or the lending market. So there is like a lot of interesting things going on there. But then what is kind of a bit not frustrating, but a bit disappointing is that the sheer quantity of users is actually pretty much always very small. So if you look at DYDX, for example, there are not too many takers out there. It's like on order of a few thousand people. Volume is pretty decent, but it's like heavily concentrated in like top 20, top 30, which again generalizes very well to our other CeFi exchanges. And same way with Uniswap, a lot of it is done by few firms. So it's again very concentrated. But at least, baseline, there is a lot of liquidity, a lot of activity. But yeah, I think we need to progress quite a bit more in terms of ease of operating there, and a lot more people just getting happy with the risks and potentially better solutions around risk management to just really have a better takeoff there.
Yeah, sure. I mean, I guess thinking about risk management as well, a lot's changed in a post FTX world. How are you kind of seeing the institutional space in a post FTX world, and how have you guys as well had to kind of adapt to that? What sort of changes have you had to make since FTX blowing up?
Yeah, I think it's there were a lot of thoughts, a lot of work to just get more comfortable with the exchanges that we're facing, and so there are a lot of really nice off-exchange solutions that are coming along that we're quite excited about. So we're kind of helping to drive that effort. But yeah, I think in this environment, you kind of and it kind of connects nicely with your initial question around how do you choose where you go and how you evaluate opportunities. So it's kind of in this environment where everyone is scared and people have short memory, but still in a way you want to kind of bet on venues that have long-term potential and that kind of already at a good place at this moment. So for us, the game is to really focus on the tier 1 exchanges, tier 1 counterparts that have a good credit profile, that withheld the storm post FTX quite nicely, which I think was pretty big achievement because a lot of the banks didn't perform as well, like in a post SVB or pre SVB situation. So that kind of goes to show that many of these companies, although maybe they have some questions, they're on a pretty good path forward, and regulation is obviously the central piece here. And once we have more guidance, will be quite favorable. But there is nothing better than diversification. So you kind of need to be prudent there and spread the eggs.
Yeah, you mentioned regulation there. I mean, what are your thoughts at the moment on the state of the regulatory landscape? And again, I mean, there's a lack of clarity. How do you think about that as a fund? And what's the approach there?
Yeah, I mean, regulation is a really big topic, and it's mostly for our general counsel to comment on. But effectively, we're trying to be on top of it and try to be as far away from the red flags as possible. And we're just really trying to be compliant and self-regulated if there is no guidance, and follow the guidance when there is one. But yeah, I mean, majority of the exchanges, they're offshore, so they're mostly self-regulated, other than jurisdictions where they are actually regulated. But that's not often the ones that see the most action. Those are usually offshore. So that's kind of a bit of weird spot, especially listening to some of the snippets from the hearing about what is considered to be security commodity and those things. It's quite amusing how little clarity and how little guidance there is. So that's, I think, is the ball is rolling. We just need to see where we land effectively.
Yeah, I think we've all enjoyed the Gensler grilling this week. And
that was the highlight of the week.
Yeah, I mean, it's. I mean, we laugh about it, but it's a serious point, and the fact that Gensler, can't clarify whether he thinks ETH is a security or not, and yet wants to go after everyone for breaking securities laws is just shows you the nature of the problem.
It's a bit downing on the US regulator, right? I mean, we shouldn't view it as regulators in general. I think it's more like it makes them look particularly bad, I would say.
Yeah, well, especially I guess in the context of EU today signing off on the MiCA regulations. So there's an openness there, and the UK as well. adopting a more sort of open approach, and obviously across Asia as well. We're sort of seeing some pretty exciting stuff. I mean, Sohan, you're in Hong Kong, so you've got a kind of front row seat to things that are going on there. So yeah, it kind of feels like, outside of the US, there's certainly more positive steps towards developing a regulatory regime that hopefully gives some clarity, and that kind of regulatory arbitrage always goes on. I think the US will actually get there eventually, because they'll realise that this space is going to build outside of there in a way. So yeah, it's an interesting time actually to see what's going on around the world.
Yeah, actually, I have a question for Nikita. Actually, like just on the topic of the whole FTX, debacle. It is interesting to me that as a market neutral fund, there were a lot of opportunities on FTX at the time, right? Like as in that was like the kind of main go-to exchange, or maybe number two. What were the what allowed you to avoid like a significant drawdown there? I mean, was it speed, or was it, as you said, speed of withdrawal, or was it just literally even though there was a big opportunity, you decided to diversify away from that?
Well, you mean like exposure to FTX itself, or just trading?
That's right. Yeah, as in because a lot of our market neutral funds were very exposed to FTX, right? Because there were a lot of opportunities.
Yeah.
There in particular. Feel free to if you can't talk about it, that's also fine.
Yeah. I mean, in a way, FTX has been again like top 2 exchange, and quite quickly gaining some more market share. So I think everyone was there, and yeah, there was. I think a lot of people were too exposed to it, but to be honest, I think pretty much all the main market makers, all the main funds, I think they had some exposure there. I haven't heard really somebody being able to escape it unscathed, other than by pure luck. So yeah, and especially one or a couple of points is that kind of the bigger you were, the harder it was to escape it, because how margin was working, the bigger the size, the more margin you had to post. And so naturally, largest firms, they had a lot of assets there and had like really big positions. So it was difficult to, wind them down. And also processing withdrawals, they were favoring smaller withdrawals rather than big ones. So you had kind of a lot of challenges as a result of it. But yes, again, some firms navigated better, some worse. But yeah, some were like surprisingly badly.
The shame obviously about FTX, well, there's a lot of shames about FTX, but it was actually a very, very good exchange, right? It worked really well. It was pretty slick. Are there which are the replacement exchanges? I mean, one of the big kind of concerns post that world was it kind of Binance basically was the market for futures. Which are the exchanges that you think potentially rival that? And I guess another question as well, that there's been talk obviously recently about FTX kind of relaunching, and which obviously raised a few eyebrows. There's a part of me that actually thinks, tech wise, why not? It was a good exchange and it works well, but from a liquidity provider point of view, what would be your thoughts on that?
I mean, that's a good question, right? I think the answer is rather not obvious. I think it actually wouldn't take much for it to become quite liquid quite quickly, because you would be quite surprised how concentrated is liquidity provision in the crypto world. Like the top few firms completely dominate the market. So if you get one or two of them on board, and it could be just as simple as, well, maybe they have a really big claim, and if they get equity token through a token, maybe that can actually be pretty nice EV trade just to deploy some capital and really provide liquidity, especially given that there were a lot of things about FTX which were pretty specific to it, and so there were a lot of optimizations that people did to be faster, better, smarter, and so you kind of just put a train on the already existing rails and just get there. So I feel like, contrary to many other people, probably risk-wise, it's like as good as it gets. Post like all of this, scrutiny, and kind of getting the supply side wouldn't be too difficult because all of these guys, they already have the accounts and the fees and so on. And again, some of these guys, they have 100 million plus that they owed by FTX. So if they create some equity value, that can actually be like pretty interesting.
Yeah, it's an interesting one to look at. I guess watch this space. The other kind of question I had, I've seen you speak sort of several times, and you speak quite eloquently on just markets generally. As a market neutral fund, do you kind of think directionally, and does the kind of general price direction of Bitcoin and the crypto market kind of impact you at all? And is that something you need to think about?
Yeah, I mean, maybe not exactly directly, but there is somewhat asymmetry between up and down. So usually volatility, say on down moves, it will be pretty aggressive if there is like really big news or whatever. But then like it can die off quite a bunch in the following weeks. So that's actually pretty bad. And when market is trending, then volumes can keep on increasing, open interest is increasing, everyone is kind of making money, and it's kind of quite synergistic. And also from exchange standpoint view, you kind of want them to do well, you want them to be profitable, just then the risks are much smaller. So in a way, right, like when Bitcoin was 15, 20K, there was like a lot of worry about exchanges, just because we've been in a downward spiraling market for quite a while. I don't know like what exposures did they have, how much investment in the long-term stuff did they do, how much sponsorship did they overextend it and stuff like that. So it wasn't clear how they can be like really profitable, and then that can kind of make them a bit more risk-seeking, which wouldn't fit too well with the credit risk. And so in a way, it's kind of on the way up. There are very few, if any, blow-ups other than hacks and so on, but those are kind of existing. And I think that's kind of the best marketing tool. Number goes up, people join the ship and cruise. So I feel like it's in a pure isolation sense, direction doesn't matter. But as you kind of explore it in a bit more in a bit more depth way, then it's actually a bit asymmetric. So there is definitely preference to market going higher, like on the allocation front, on just general buzz, on usage of whatever. And again, like I guess another way what I'm saying is that any crypto business is like inherently directly or indirectly long crypto. So if the space Bitcoin goes to zero, like there won't be too much to do for anyone.
Yeah, I guess as well, spot price goes up, collateral values go up, people can take more leverage, and you've got this kind of virtuous sort of circle of sort of trading that sort of starts to happen. What are your thoughts at the moment in terms of sort of price-wise, directionally, where things are going?
Well, I think we can definitely go quite a lot higher, right? What I can definitely comment on is that I think interest from the investor is not that high. I think a lot of the institutional guys that were looking to deploy into the space through the token exposure, through whatever ETPs or whatever else, they didn't do too well last year. And those that did the venture, I think venture overall didn't do too well, and crypto venture didn't do too well either. And especially there were, examples of Celsius and Voyager and BlockFi and Genesis, and so all of those guys, or Gemini and FTX. So all of them like really, prime kind of estates on the venture front, and they all kind of did really bad. So I feel like a lot of them kind of frontliners, they're licking their wounds, and they're not really looking to re-enter. So I feel like many of them just had their asset base shrank a bunch, or if it's family office, maybe they just downscaled. So I think not many people are joining the move just yet. I think people just need time diversity of investments, and we just haven't had enough of it. But certainly there is a lot of positive moves, and like people are paying attention, and number goes up is kind of again the best marketing tool. So I definitely think that there is legs to this development, and there is a lot of positive moves on the ETH front, and like all the scaling solutions, usage, gas, and so on. So I think it's quite decent space, a decent place, and certainly one day after FTX, if you said whatever April 20th we're here, people would be quite pleased with that.
Yeah. I mean, it's interesting. Well, on the VC side, obviously, like all these things, bull markets, valuations get ridiculous. I imagine we're going to go through a similar phase with anything with AI in it is going to command a premium. Actually, I saw you repost on social media thing of sell me this pen, and someone saying it's an AI driven pen or something like that. From the VC side, which you're involved in, is this the time now where you guys look for the opportunities when others are kind of A, staying out of the market, and B, valuations are probably a little bit more depressed?
Yeah, I think it's good and bad at the same time. So all of the VC guys, they obviously always beat the drum that valuations are lower, and so it's great. But if you look at the principal components, basically the life cycle of any investment now is way longer. Say for crypto, right? Like we've seen projects go from seed stage, idea kind of set up to launching a token, weeks or months after, and then hitting some crazy valuations very shortly after. So I think that's kind of it's not happening too much. People realize that they will be benchmarked against liquid coins to kind of make some sense of what the price floor or target should be, and all of them are much lower. So okay, maybe the valuation was 50 million, and now for the same thing you would pay 20, but also upside is maybe it's 5x lower. So and then for you to actually get liquidity out of it, maybe it's 2 years longer, and then there are a lot of other risks, right? What if a project doesn't take off? They spend half the capital, and there is no traction. They just most likely wouldn't be able to raise next round, so they're kind of a bit stuck. So I think it's much more risky environments, and that's why I think the numbers are such that deployment on the venture fronts is much slower this quarter than it's been, I think, in like 2 years. And this is very much understandable. And more than anything, it could be just saying that public markets are quite a bit mispriced against the venture. Because with venture, it's like the risk is only so low that this thing can go, right? Like nobody's going to raise it like 500K valuation. It just makes zero sense. So it's kind of, there is a floor to it, especially for good teams and so on. And so it's kind of, the whole thing is much slower. People are cutting down on resources, on exploration. People just focusing on the core. So partnerships are harder to strike, capital is harder, to get by, and so everything is just much lower. And so I think investors are pricing it in and kind of quite patiently waiting.
Yeah, no, it's an interesting environment. And are there certain kind of specific areas that you guys look at in terms of where you'd sort of look to focus investment?
Yeah, I mean, what we're kind of trying to do is stick to what we understand, which is, in general, a decent idea. So what we're trying to understand and ask ourselves is what things are actually missing in terms of technological stack. What are the problems from the first hand of using whatever there is out there, and what projects that we can buy can actually be the end user of. So like one example that we give, which worked very well, is one of our portfolio companies. It's called Morpho Protocol. So that's like a layer on top of Compound and Aave, which seeks to match P2P lenders and borrowers, and effectively pass on the improvement to the matched pairs. And so that's kind of been one of the quickest raising lending protocols in the market in terms of TVL. I think at the top I think they're at around 500 million, so it's quite chunky one. And so we're big borrowers overall, and we're quite familiar with all of the problems, and they've been like really good team and shipping very, very quickly and very well. And so as being a backer and also user of it is very synergistic with kind of what we're trying to achieve. So that's kind of been quite nice. And these are some typical investments that we'll do where we could work with the team and help to bootstrap the growth and have them in directions. But I think in general, there are a couple of things that we're looking at for existing projects is fee generation that is organic, right? So it's quite difficult to keep on paying in the tokens that you print to incentivize the growth. But the question is, who is the marginal buyer, right? Otherwise, it just spiral to the zero. And if there is no marginal buyer, and maybe there is like some dumpsters that keep on bidding for it, but in a way you want something that's kind of is sustainable, and that's a very important word. And that's kind of what we ask. It's like, who is using this? And if incentives go away, is there actually a service that they provide that actually is worth paying for? And if so, like how much are people actually, spending on it? That's kind of, in general, people don't like spending money, but if they do, then there is a good reason. So you kind of try to understand what those reasons are and back those guys.
Yeah, I mean, I think that again, once all the hype always calms down, then you're kind of left with hopefully A, the good businesses, and B, everyone's a little bit more sensible in kind of evaluating, have these things got real utility, sustainability, rather than, just kind of aping into stuff. It will be interesting with the AI thing, given that it's coming so quick on the heels of the crypto sort of bubble and all the things that happen around that, whether, investors will kind of learn those lessons and they'll be fresh enough in the mind, or whether everyone's just going to get giddy with excitement and just throw money into AI. I think that's going to be fascinating to watch over the next sort of few months.
I think in general, people like to chase trends, and being early to a trend is quite useful. And it could be useful in all sorts of ways, right? So being at the forefront of AI revolution, I think it's quite common sense that it's incredibly powerful. But how to monetize it and how to really create service, that's a bit of work in progress for many of these things. But everything can be now backwalked from OpenAI deal, right? So you could say, okay, if this thing is that much, then this thing could be this much, or after this milestone, it can be X or Y or Z. So I think there will be a bunch of it, and it's probably will be a lot of kind of using just open source ideas, repackaging them a little bit, putting GUI, putting like a little bit of things on top, and just selling as a revolutionary breakthrough, which we've seen in DeFi. Like so many of these things, you talk to the founders, they say, yeah, like we just ported Aave from this chain to that chain and changed this and that. It's like cool. So it's like 1 day of work, but that's what composability and open source nature of these things offers you. But I think all of these iterations on the AI front, they will be probably overly excited and overly overheated soon enough. But there will be some pretty big companies that will emerge out of it, I think. That could be quite impactful, and the game for VC guys is to hit one of those, super impactful companies that can keep on driving the growth and productivity for the world.
Yeah, no, it's interesting. And I think that's probably a good place to maybe wrap things up. I mean, it's great, Nikita. It's been great having you on. Certainly, I think since we first started speaking, we've seen, again, like all things in crypto, we've lived a lifetime. But it feels like we're in a better place now, and excited by all the things you're doing, and it's interesting hearing on the VC side and potentially hopefully things picking up there. And yeah, I don't know any kind of closing thoughts or from Nikita or Sohan.
I mean, my main takeaway is invest in what you use. I think that to me is a great tagline for this entire episode.
Invest in what you use.
Yeah. I mean, that's kind of
all right. Yeah.
Well, that's our motto, right? Like for the venture stuff, I think we're probably a bit more technical than the average VC investor, and once you're deep in the weeds, and once you're playing with toys that you invest in, that's kind of showcases you what actually problems are and what actual what solutions could be, because nobody knows the answers. But if you went through the depths of understanding something and building strategies to profit from some of these things, then chances are you probably understand it reasonably well. So then you always have a very long wish list of things that you would want to have, but you just don't, because maybe that hasn't been priority, or maybe it hasn't come to that time yet. And I think that's not the mindset that's shared too often in the investor crowd. Many of them are kind of a little bit more on the surface, but a few of them are really in the depths, and we love to co-invest with them. But yeah, that's, I guess, is the tagline: invest in what you use.
Invest in what you use. Well, good stuff. Well, Nikita, always a pleasure to speak to you, my friend. And we'll speak to you soon.